Hello, it is Monday, the 13th of April, 2009. This is Brian Shannon from AlphaTrends.net. We had a kind of mixed day here today, but it felt a lot more positive than what the actual closing numbers were. The NASDAQ 100, the Qs that is, closed with a nickel loss here today, and that was basically 0.15%. No big deal, obviously, on a percentage basis. It is good to see that the market continues to hold above this prior level of resistance here that had been tested last week, and the market actually found support along that rising 10-day moving average. The volume does continue to diminish in here, and we are starting to get towards the beginning of the earnings cycle. So you're going to have to start to be very careful as far as what you decide to hold on an overnight basis. There's a lot of stocks making good moves, and if you look at the intraday action as far as the advanced decliners go on the New York Stock Exchange, we'd seen that the decliners took the immediate lead and then kind of trailed off here, and finally there were more advancers at the end of the day than there were declining stocks, and in particular the financials continued very strong today. One stock that I had mentioned early on in Twitter was shares of Feed, F-E-E-D, and I had mentioned on Friday in Twitter that I was buying some of this stock, starting out at right here at $2.36, and I had purchased more today at $2.39. And what I'm going to do this evening in the live event, you can register at alphatrends.net. I had some inside information. I don't want to go on tape here, so what I'm going to do tonight is let you know what that inside information is when you tune in tonight. So be sure to register and get in early. I'll let you know what that information is and how we can continue to take advantage of it. Again, go to my blog for that. I don't want to get anyone in trouble, so make sure you do that. So let's go back to the NASDAQ 100. We had seen, of course, that the market had broken past that resistance and acted as support on a 10-minute time frame. We continue to hold. We hold above last week's little level of resistance before the gap higher. We didn't take out that low either from Friday, so the market came down initially with a little bit of had a little bit of pressure, but as we see on the intraday time frame, that it came back above the daily VWAP and saw some buying as it took out the resistance here from the morning move, but wasn't really unable to follow through much to the upside. So I look at today in terms of the NASDAQ as a more neutral event. It still is reasonable, I think, that this the election highs and maybe even the 200-day moving average might come into play on this move. Obviously, we're becoming more and more extended. I think that we're going to see at some point a sharp sell-off. Maybe it's going to be earnings related. I think we're still it's becoming even riskier the more extended we get to hold on an overnight basis, because we're so far extended, and now we have this catalyst coming up, which is earnings season. So be aware of that. The average price since this rally began is about $30.20. If for some reason we gap down to that level or something, I don't view that as something that's likely to occur. But if we get down there, then I would probably be looking to be a buyer of any such panic type of movement. The Russell 2000 was up 2 cents today. This market continues to hone in on these highs. Right, well, I still have it on VWAP line. They continue to hone in, it looks like, on these highs up near about 47.5 from late January, early February. We've had a massive percentage move in here. If you're making big profits, remember that it's, the market makes it easier on the when it's rallying like this. Don't forget about playing a strong defense, because we remain with a declining 200-day moving average. This still, in my mind, qualifies as a bear market bounce. It's likely, I don't think that we'll see these lows again, at least for some time, but pullbacks down towards that 50-day moving average are not unreasonable to expect at all. So keep your expectations real, trade what the market gives you, and be on the alert for opportunities in both directions. Let's take a look at the S&P 500. It was up 2 cents, like I said, still working, it seems, towards these levels here from mid-January, and that's at about $87 a share. So we continue to move higher. The market seems to be running on fumes as the average daily volume continues to decline in here, but you can say that the declines have come on light volume and the rallies have come on light volume. So maybe that's just the environment we're in. Either way, only price pays. We still have a rising 5-day moving average. The market on the 10-minute time frame even is showing this pattern of higher highs and higher lows. On the 1-minute time frame in here today, we saw that that the market had spent most of the day above the daily VWAP, and continues to be bullish action, of course. So you've got to keep that in mind. But again, always be aware of the longer term time frame, because rallies generally will fail somewhere near or below that declining 200-day moving average. Doesn't mean that's where we can expect for this market to go, but we still have to look at it as the big money has been still net liquidating over the last 200 days, and that's something that a lot of people pay attention to. The financials continued, like I said, to be the stronger group in here today. On the 1-minute time frame, it looked like maybe they were going to break down right in here as the market made this lower high, and I said maybe we're going to head down towards the 2-day moving at 2-day VWAP, which is right here. At that point, it was down at about $10.40. Back to the 1-day time frame, though, you see it did make the lower highs and lower lows, but it got back above the daily VWAP and took out this little resistance. And where it actually got up to at the end of the day was at $11.20, where we saw daily R2. I'm not going to draw that in right now because it'll take up too much time. But the move here obviously continues to be based off of the move we saw develop on Friday, where we had that large gap higher, and the market continues to rally here. Next potential bigger level where we're likely to find some resistance, that is prior support, is these lows near from late December, near about $11.35 to $11.50. There's no sign that that these financials make for a good short right now, but we do have earnings coming out, so I think it's a very dangerous game in here to play these overnight. Intraday, there's just some fantastic opportunities, again, in particular if you're playing those double and triple funds. So again, be sure to tune in tonight. Space is limited. It's first come, first serve, so be sure to tune in, and I'll fill you in on the details of that other trade.